and more quickly. I think it's a question that each person needs to answer for his or herself. My experience is that precious metals bull markets are led by gold because the first buyer is the fear buyer. That person buys gold not because they think it might go up, but because they think other things might go down. I would argue that we've been in a primary gold bull market for at least 4 years, but one might argue that we've been in a gold bull market in US dollar terms for 25 years, going back to the year 2000. In my experience, after gold's momentum establishes the precious metals narrative in the minds of generalist investors, leadership in the precious metals market switches from gold to silver. Gold keeps advancing, but silver advances further and more quickly. Therefore, the investor must ask him or herself, what is their motivation? Are they insurance buyers or investors? In which case they stick to gold. Or are they more aggressive? Are they speculators? In which case they attempt to play the transition from gold to silver uh, in an attempt to capture the alpha that has traditionally been available in silver in the second half of a precious metals bull market. It was posed to me very frequently by my former mentor and partner, Eric Sprott, um, who is a big proponent of playing the delta between the 100 to 1 gap in pricing and the 16 to 1 gap with regards to scarcity. I have never understood the relevance of the gold silver ratio personally because the ratio doesn't talk to extraction costs. Remember that most silver is produced as a byproduct of mining other metals. And effectively, if you're taking the silver stream out of a large copper gold porphyry, your extraction costs are zero. It's a byproduct. It also doesn't speak to utility, in which case silver has an advantage over gold in terms of its industrial utilization. What I have noticed is, and I've been through 3 silver bull markets in my professional career, what I have noticed is that the fact that I don't understand it doesn't matter. When and it ends up that silver pricing has almost nothing to do with industrial demand in the course of a silver bull market. It has everything to do with the generalist investor being intrigued by the precious metals narrative as a consequence of the momentum in gold. Why is this so? I suspect that the lower unit cost of silver makes it more accessible to more people. I expect, too, that its historic reputation for volatility, 2 moves from below $5 to $50 and 1 move from $1.25 to $50 makes it catnip to speculators. But those are suppositions on my part. I don't know them to be true. Again, it depends on who you are. The truth is that in a precious metals bull market, even the biggest and the best companies deliver superb performance. And they deliver superb performance at much less risk than other parts in the sector. If you are speculatively inclined, and in addition to being speculatively inclined, willing to do work, and in addition to doing work, willing to absorb volatility, the alpha in the juniors is both predictable and unbelievable. The difficulty is that most people aren't able or willing to do the work, the securities analysis, to de-risk the smaller company sector well enough to be able to afford to invest in it. Others that are too impatient. I don't know. You don't know. Warren Buffett doesn't know. And Eric Sprott doesn't know when leadership in the precious metals markets will extend to the equities, and then when they will extend to the juniors. Further, most investors aren't willing to stomach the volatility in the sector. The junior stocks can decline by 15% for no reason whatsoever other than that a fund that held it experienced some selling in the fund and had to sell the underlying security. And a lot of people, if they don't have an opinion as to the value of the company, when they experience a 15% decline in the share price, think, oh, something's wrong, and they sell. They get shaken out of a position where there's no reason to be shaken out of it. People who can't take volatility, who can't take risk, and who can't do hard work are better off buying the best of the best and enjoying market beta. In a gold bull market, the beta, I define beta as the extent to which the market itself outperforms the general securities market, means that the biggest and the best gold mining companies, peak to trough, in a gold bull market can generate 3 or 4 or 500% returns. Uh, Sometimes investors who aren't willing to do the work or can't stomach volatility or excessive risk should content themselves with owning the best of the best, underperforming the market, in fact, but de-risking it. For others, I've been extraordinarily fortunate in my career. I've had lots of uh, tenfold increases, 1,000% gains, several 20-fold gains, and a couple hundredfold gains. To me, those are irresistible. I am addicted to speculating, although I'm an investor too. I cover the waterfront, but I work very, very, very hard. I've done this for a very long time. I'm absolutely immune to volatility. Doesn't matter to me a bit. And despite the fact that I'm old, I've become extremely patient, I think in 5 or 6 year terms. People need to do a personality assessment. At the risk of being branded politically correct, I have to correct one of your statements. My database, the new people to my database who were invariably young are now 30% female. So you need to say he or she, not being politically correct, but in fact being factually correct.
Sure.
Now I'll get to the question. Um, Investing in yourself before you invest in the market is a prerequisite. And in addition to studying natural resources and precious metals markets, one needs to study investing generally. I would suggest that one prerequisite is to read a book called Economics in One Lesson by Hazlitt, a book that teaches you the way the world is, as opposed to the way that people who teach you in university or in major media would like you to believe it is. Don't just buy the book. In fact, you don't have to buy it. It's at every library. Just read it. And then read a second book called The Intelligent Investor by Ben Graham. This is the best investment book ever written relative to the effort required to read it, which is low, but you have to read it. Then, for specific knowledge around natural resources, there are a lot of online sources. I have a vested interest in what I believe is the best source for beginning investors, which is, of course, the Rural Classroom. It is attractively priced, which is to say it's free. In particular, there's a series of lessons called Introduction to Natural Resource Investing. I think there's now 9 lessons there out of an ultimate curriculum, which I hope to complete before I die, of 60. In addition, there are about 200 hours of instructional programming at the Rural Classroom and discussion groups that are free to participate in on a wide variety of topics. There is also, most Thursdays, an hour-long question and answer session hosted by myself where we try to take all comers. And as I say, that's free, which is a very good price. I always buy early and I always sell early. It's a flaw in my character. I assign a value to something or a series of values of something. And when I look at a position I have, I ask myself, is this fully priced? And is there another position which appears to me to be selling at a more attractive discount? What that means myself when I look back is if I was a more accurate trader, I likely would hold some positions for longer into the blow-off period because things that are overvalued tend in the near term to become more overvalued. Because my investment education came as a credit analyst, I don't trade narrative or momentum well, but I trade value extremely well. I'm comforted by that great Bernard Baruch comment about traders. He said the only guy who absolutely bought at the bottom and sold at the top was a liar. It didn't happen. And I have identified in my
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.